real surprises, guys, in this set of minutes. Back in mid-June when they met, Fed officials saw a strong economy that was plagued by COVID concerns, war, supply-demand imbalances, and elevated inflation. As Chair Powell said at his news conference then, officials were, quote, worried about longer-run inflation expectations could be beginning to drift up, and risks to inflation skewed to the upside that could be entrenched into expectations. For Fed officials, the answer and solution to supply chain, labor, and inflation problems was, quote, an appropriate firming of policy, a phrase they used several times throughout the minutes. At this meeting, appropriate was 75 basis points, and quote, participants agreed that an increase of 50 or 75 basis points would likely be appropriate at the next meeting. Their goal, get to a, quote, restrictive stance of policy and perhaps even a, quote, more restrictive stance of policy if inflation continued to be a problem. They recognized that policy firming could slow the pace of economic growth for a time, but there was no talk of recession caused by their policy firming. Now, this was all, again, in mid-June, and we have a lot more data since then. But at that time, they saw a strong economy that appeared to be picking up, the minutes say, and the staff was forecasting a second quarter rebound and solid growth throughout the year.
Any hint, therefore, this feels hawkish, Mike, any hint of, well, voices that backed Esther George that felt perhaps 75 basis points was a little too much, given we've got balance sheet runoff too?
Well, interestingly enough, the minutes suggest that Esther George was the only member of the 18-member committee who felt that way. There was no backing for her view of 50 basis points. Now, she wasn't saying that it would send the economy into recession. She thought it would send a bad message to the markets because they hadn't prepared them properly. So at this point in mid-June, there was no feeling that they needed to do anything less or even more. There was no talk of a 1 percentage point move either.
Mike, it's interesting, though. In the last few weeks, it feels like inflation has really rolled over. Break-evens have dropped from a 373 to a 250 on the 5-year break-evens. Any sort of hint that even 3 weeks ago, so much has changed?
No, at that point, 3 weeks ago, they were focused on economic growth, which was very strong, and inflation, which was threatening to go higher. And so they set their policy based on those expectations. So we're going to have to watch and see what Fed officials say as more and more data come in. Of course, we've got on the Friday, we have the jobs report, and on the 13th, we have the CPI report. Those will be key in setting expectations for the July 27th meeting.